Hey everyone, welcome back for another deep dive. Today we're tackling something pretty fascinating, the idea of queer wealth building and how it kind of intersects with personal finance but also social activism within the LGBTQ plus community.
This is intriguing.
Yeah, it's going to be pretty thought-provoking, I think. We'll be looking at some compelling arguments and we'll definitely be raising some questions along the way.
I'm ready to dive in.
So the sources for this one are, well, it's a real mix, actually. We've got journalist and activist Tick Mulan. They were on the Living Not So Fabulously podcast talking about wealth building as, get this, radical activism.
Interesting.
Then we'll be bringing in some market insights. Those come from financial expert Rob Howen from the Trader Talk podcast.
Okay.
And to kind of round things out, we'll be pulling some snippets from Yahoo Finance about current market trends, consumer spending habits, that sort of thing.
Sounds like we've got a lot to unpack.
Yeah, we do. So let's jump right in, shall we? Can building wealth actually be a form of activism, especially within the LGBTQ plus community?
Well, that's a good question. It really makes you question your assumptions about both wealth and activism, doesn't it?
Yeah.
Traditionally, I think a lot of us would maybe connect wealth with those like capitalist structures.
Right.
And then we'd see activism as kind of pushing back against those systems.
It's that classic dichotomy, right?
Yeah.
But Tick Mulan, they really turn that idea on its head, I think.
How so?
Well, they point out that trans individuals, they actually face poverty at a rate, get this, 4 times the national average.
Wow.
And for queer people of color, it's even more stark. It's 8 times higher.
Those numbers are, wow, really makes you stop and think.
Yeah. It just underscores those economic disparities that the LGBTQ plus community faces,
Absolutely.
especially for trans individuals and people of color, like Mulan was saying. It also, I think, kind of shows why they see wealth building not as this personal goal, like, oh, I want to be rich, but as a potential act of resistance.
That's a really interesting perspective. Like, it's about shifting the power dynamic.
Yeah, exactly. Mulan argues that by building wealth, the community, LGBTQ plus folks, they can gain a stronger foothold in a system that's, let's be honest, historically marginalized them.
I see what you mean.
Yeah.
And, I was struck by how they challenge the notion that wealth building is, well, some people think it's like anti-social justice,
Yeah.
or that it's like conforming to, those capitalist norms.
Right, like selling out.
Exactly. What are your thoughts on that?
Well, it's a good point. And I think it's important to acknowledge that this, like, aversion to wealth building, it comes from a valid place.
I could see that.
Capitalism, as we know, it has a history, a long one.
Yeah.
And it has been used as a tool of oppression.
For sure. Especially against marginalized communities.
Yeah, exactly.
But I think what's interesting is that Mulan, they don't shy away from that tension.
So what do they do instead?
Instead, they kind of encourage us to like think about money differently.
Okay, how so?
They want us to see it as this resource,
Yeah.
an energy source even.
Energy source. Yeah. And we can harness that to empower the community.
I love that metaphor. Money is energy.
Right. It really resonates, doesn't it? It's like instead of seeing it as this static thing, it's like finite, oh, it's just this pile of money. We can actually see it as this force that can be directed towards, well, positive change.
It really reframes the whole relationship with money, doesn't it? It's like shifting the focus from me, more for me, to like, how can we collectively empower ourselves?
I totally agree. It's about leveraging resources to, well, to uplift the community, advocate for change, create a more just society, all those things.
I'm with you.
And this kind of brings us to another, I think, fascinating point that Mulan makes.
Okay, I'm listening.
They argue that toxic masculinity actually plays a big role in shaping financial spaces.
Toxic masculinity in finance.
Yeah.
I don't know. It's not the first thing that comes to mind when I think personal finance.
Right. It's not something we usually put together.
Yeah.
But Mulan argues that it's really deeply embedded in the culture of, well, a lot of financial institutions, but also like those learning spaces.
Oh, interesting. So how do they define toxic masculinity in this context?
Well, they describe it as this focus on external validation. Like, look at me, I'm successful,
Okay, I've seen that.
And then there's competition, power dynamics, who's on top,
Yeah.
sense of entitlement.
Okay, I see where they're going with this.
And they contrast it with a more, I guess you call it accountable and collaborative form of masculinity.
Got it. So more like we're all in this together.
Yeah.
Less about ego and more about, working together for the common good.
That's it. And they even bring up, remember Mark Zuckerberg's comments on Was it Joe Rogan's podcast?
Oh, yeah, vaguely.
Yeah, he was talking about bringing back masculinity into corporate culture.
Interesting.
And, this is despite men already holding like 89% of Fortune 500 CEO positions.
Wow, yeah, that's a big number.
It is. What did you think about that example?
It's pretty telling, isn't it? Like, how deep these power dynamics run.
Yeah, it is.
And Mulan, they actually attribute comments like Zuckerberg's to fear.
Fear.
Yeah, it's like a fear of losing power,
Yeah.
fear of diverse representation, fear of a shift in the status quo.
It's like clinging to that old model of leadership, right? The one that's, let's be honest, outdated
Yeah.
and not equitable in today's world.
Totally agree. And this whole fear-based mentality, it creates a barrier for those who don't fit the mold, especially within the LGBTQ plus community.
For sure.
It's like, you don't look like us, you don't act like us, so there's no room for you at the table.
Right. And they specifically call out those, like, what do they call them? Like the bro-tastic or the boss bitch mentality.
Oh, yeah, I've seen that too.
It's so prevalent in some of these financial learning spaces.
For sure.
And they argue that these aggressive, kind of exclusionary teaching styles, they just alienate people.
Right, especially people from marginalized communities.
It's true.
It discourages them from seeking out that financial knowledge and empowerment.
It does. It creates this almost hostile environment.
Right.
And it just reinforces those power dynamics we were talking about.
For sure. It makes it really hard for diverse voices to be heard and for vulnerable conversations to take place.
And speaking of vulnerability, Wulan really emphasizes normalizing those conversations about finances, especially within the LGBTQ plus community.
Yeah, that makes sense. Creating that culture of support and understanding where people, no matter their background, feel comfortable sharing their struggles.
Yeah, asking for help, learning from each other's experiences.
It's about breaking down the stigma and shame around money.
For sure, especially within communities that have historically been marginalized and disenfranchised.
Right.
It's about challenging that myth of the self-made millionaire.
Yeah.
Like, oh, financial success just happens overnight, no struggle involved.
Yeah, that's a myth we need to bust wide open.
Exactly. Acknowledging those challenges and, seeking support. It's incredibly powerful in building, I think, a more inclusive and resilient financial community.
Couldn't agree more. So we've got Mulan's perspective on, building wealth and how that can be a form of activism and their own journey to financial security.
Right.
But now I think we should look at how that connects with what's happening in the markets right now.
Yeah, let's do it.
What are the trends and investment strategies that are out there?
Yeah, what are the financial experts saying?
Exactly. Are you ready to switch gears a little?
Let's do it. It'll be really interesting to see, how the two connect.
Yeah, for sure. Well, Rob Howen, he was on the Trader Talk podcast.
Okay.
And right away, he's talking about how important earnings and economic data are.
Makes sense.
He reminds us that, earnings are historical data, but forward guidance, that's what we should be paying attention to.
So basically, don't get caught up in what's happening right now, but where the company's going, their vision for the future.
Exactly. He wants us to do our research and look for companies that have solid fundamentals, a clear path for growth.
Sounds like a very strategic and intentional way of investing.
It is.
Which really, it aligns with what Mulan was saying about being mindful and deliberate with our financial choices.
Yeah, I see that. It's not just about chasing the highest returns, but understanding those deeper factors that drive long-term value.
Exactly.
Which, brings us to an interesting point that Howen made.
Okay, what's that?
He mentioned a possible shift in market leadership.
Okay, meaning?
Away from those magnificent 7 tech companies that, let's face it, have been dominating for years.
Oh, yeah, those big names.
Yeah.
So does that mean it's time to dump all our tech stocks?
Not necessarily, no.
Okay, good.
I think it's important to remember that markets, they move in cycles.
Right.
So while some sectors might be, slowing down, others could be just getting started.
Makes sense.
It's all about recognizing those cycles, right?
Right.
And making sure our investments are spread out, diversified.
Gotcha. Diversification.
Mm-hmm.
So speaking of which, Howen, he's got his own ETF, right?
He does, yeah.
And it's actively managed, aiming to outperform the S&P 500 and the NASDAQ.
That's a pretty ambitious goal.
It is. So what's his secret sauce? What's his strategy?
Well, he focuses on a few things: fundamentals, valuations, and something he calls risk-reward assessment of stockholders.
Risk-reward assessment of stockholders. Okay, break that down for me.
Well, it means he's looking beyond just the numbers.
Okay.
He's trying to get a feel for, investor sentiment, market trends.
So he's adding a bit of market intuition to his data analysis.
Yeah, like he's trying to understand the psychology of the market.
Interesting.
And his ETF, it's not just U.S. focused. It's diversified across, well, all capitalizations and developed international markets.
So it's a pretty global approach.
It is. It's about seeing the bigger picture, not just picking individual stocks.
I see. I'm noticing a theme here.
What's that?
Both Mulan and Hewan, they really emphasize being strategic,
Yeah.
intentional with our finances,
Yeah.
whether we're talking about building wealth personally or navigating the stock market.
Totally agree. It's about taking charge of our financial future.
Exactly. And making choices that line up with our goals and values. Okay, let's see what Yahoo Finance has to say about all of this.
Sounds good.
So they were reporting on some market slippage
Okay.
and also highlighting, declining consumer confidence,
Yeah.
which could really affect people's spending habits.
It does seem like uncertainty is kind of the mood right now,
Yeah.
With inflation and interest rates still high, global events, it's making things pretty volatile.
Yeah. Investors are definitely feeling a bit on edge.
Understandably so. But I thought Kevin Mann, the CIO of H&W, he had a good point.
What was that?
He warned against trying to time the market.
Yeah, that's classic advice.
He reminded us that something like 95% of stock market returns, they happen on just 1% of trading days.
Wow, that's a stat. So basically, patience is key.
It is. It's way more important to have a long-term perspective than try to predict those, short-term fluctuations.
Yeah, because you could miss out on big opportunities that way.
Exactly. And this actually connects back to what Mulan was saying about investing for long-term growth
Right.
and prioritizing time freedom.
The longer we're invested, the more time we give that compound growth to work its magic.
Exactly. And that growth is crucial for financial security, especially if we're thinking about using those resources to, make a real difference in the world, like Mulan was talking about.
Right, so it's not about hoarding wealth, but using it as a tool for positive change.
Precisely. And Yahoo Finance, they also pointed out that different generations, they have different ways of approaching investing.
That makes sense, right? Like someone in their 20s versus someone nearing retirement.
Yeah, exactly. Someone just starting out, they might be more okay with taking on bigger risks.
For potentially bigger rewards.
Right. But those closer to retirement, they might want to protect what they've built, maybe focus on income.
So it's about finding that balance that works for your situation and goals.
Absolutely. And it highlights how important it is to have a clear financial plan.
Yeah. One that considers both those short-term needs and long-term dreams.
Exactly. Now, remember we talked about Howen preferring public equities and developed markets?
Yeah, I was curious about that. Why is he drawn to those?
Well, he argues that those markets, they have more established regulatory frameworks.
Yeah.
And investor protections are generally stronger.
So it's about minimizing the risk.
Right. He looks for companies where the management, they're aligned with the shareholders' interests.
Okay.
And where there's less chance of sudden rule changes or a lack of transparency.
Makes sense. So he's all about balancing that maximizing returns with managing risk. What about alternative investments? Like those family offices often have access to a wider range of options, right?
Oh, yeah, for sure. Howen mentioned that family offices are looking more and more at alternative investments.
Like
Things like private credit, private equity, even, get this, art and collectibles.
Wow, that's interesting. What is private credit exactly? I've heard the term, but I'm not sure I totally get it.
Sure, so it's basically lending money to companies or projects that aren't publicly traded.
Right.
Like imagine stepping into the world of venture capital, but instead of owning part of the company, you're lending money.
So it's more direct, like you're funding businesses and projects directly.
Exactly. And it can offer higher returns than, say, bonds or other fixed income investments.
But there's got to be more risk involved, right?
There is, yeah. Higher return usually means higher risk. But what's interesting is that Howen, he's a bit cautious about private credit.
Oh, really? Why's that?
He points out that there's been a huge influx of money into that space lately,
Okay.
which has made it more competitive,
And
which could lead to more risk.
so just like any investment, it requires doing your homework.
Exactly. Understanding the market and really assessing the risks and potential rewards.
Makes sense.
And Howen always comes back to, well, the fundamentals.
Yeah.
Finding companies with strong track records, ethical practices, and a vision for the long haul.
That makes me think of Mulan again, and that whole idea of aligning our financial choices with our values.
Absolutely. It's about more than just making money.
Right. It's about making a positive impact with our investments.
Exactly. Okay, but now I want to touch on something else Yahoo Finance was reporting.
Like, what's that?
They said that over a third of Americans are actually cutting back on spending.
Really?
Yeah, to deal with those rising costs, inflation.
It makes sense. I mean, things are getting expensive. It highlights how important it is to be financially resilient.
Financial resilience? What does that mean exactly?
Well, I guess it means having that financial ability to weather those unexpected storms.
Storms.
Job loss, medical emergencies, even a pandemic.
Oh, I see, like having a safety net.
Exactly, like a financial cushion for when things get tough.
And how do we build that cushion?
Well, it starts with financial literacy,
Okay.
smart spending habits, thinking long-term with our savings and investments.
So it's about being proactive,
Right.
not just reacting when something bad happens.
Exactly, having that plan in place so you can navigate those financial ups and downs.
And that plan, it might involve making tough choices,
Like,
like maybe putting off that vacation or home renovation.
yeah, like the Wells Fargo study was showing.
Right. It's about choosing needs over wants.
And making those conscious choices about spending that align with our goals for the future.
And I think it's a reminder that financial well-being, it's not just about how much money you have.
It's about feeling secure and in control, right?
Yeah. And having the freedom to make choices that reflect what's important to you.
I like that. Speaking of different life stages and challenges, Yahoo Finance, they highlighted some interesting stuff about Gen X.
Oh, yeah. What was that?
Remember that Fidelity study that showed, I think it was Gen X, has like an average of $192,000 saved in their 401ks?
Yeah, I remember that. But they also had the highest rate of loans taken out against those 401ks.
Exactly. It's like they're stuck between a rock and a hard place.
Not the sandwich generation,
Okay.
right? Supporting their kids, taking care of their aging parents.
It's a lot of financial pressure to deal with.
It really is. Which makes it even more important to have a solid financial plan.
One that covers both the short-term needs and those long-term goals.
Exactly. And, we heard some really good advice from Andrew Fincher. He's a financial advisor, specializes in retirement planning.
Oh, yeah. He talked about goals-based planning, right?
He did. I thought it was a great approach.
Me too.
It starts with defining your ideal retirement. Like, what do you really want it to look like?
So, like, how do you want to spend your time? Where do you want to live? That sort of thing.
Exactly. It's about painting that picture and then figuring out how much you need to make it happen.
So you work backward from that goal.
Right. You create a plan that helps you get there. And for those who might be feeling behind on their savings, he had some good tips.
Right.
He talked about catch-up contributions.
Oh, yeah, those are helpful.
For people 50 and over, it lets them put away even more money each year into their retirement accounts.
It's a nice way to accelerate your savings, and you might get a tax break, too.
Exactly. He also mentioned some financial planning software, things like Money Guide Pro.
Oh, yeah, those can be really helpful for people who want to be more hands-on.
Right, and there's so much technology now to make planning simpler and more personalized.
Totally agree. It's about empowering yourself with that knowledge and the tools to make smart decisions. Take control of your financial life.
Absolutely.
Okay, I think it's time for a quick recap.
Yeah, good idea.
We've covered a lot today, from Mulan's idea of queer wealth as activism to Howland's strategic approach to investing, and all those insights from Yahoo Finance about, well, the markets and how people are behaving.
We talked about financial literacy, planning for the future, and aligning our choices with our values.
We even touched on the challenges that Gen X faces and the importance of having that personalized retirement plan.
So as we wrap up this part of our deep dive, what are some of the key takeaways that are sticking with you? What really resonated?
For me, is that link between personal finance and making a difference, like social change.
That really stands out. Mulan's idea of radical wealth building, it really challenges us to rethink money, It's not just about getting rich ourselves.
Right.
It's about how we can use it to create a more just world, a better world for everyone.
It's about making sure your financial goals, they line up with your values.
Exactly. Whether that's, supporting causes we care about, promoting social justice, even investing in a more sustainable future.
And the stuff we talked about from the markets, it really backs that up,
It does.
It's about investing with a purpose.
Yeah.
Supporting companies that are doing good in the world, using our resources to make things better.
I like that. And it's not just about the companies we invest in. It's about investing in ourselves, too, right?
Absolutely. Making financial literacy a priority, finding resources, building that foundation of knowledge.
It's about taking control, making those informed choices that allow us to live authentically, and make a real difference.
Okay, so before we wrap up, I want to leave you with something to think about.
Okay, hit me. If you could reimagine money, not as this like tool of capitalism, but as something for good, positive change, what would you do with it?
Wow, that's a really powerful question. It makes you think outside those traditional ideas of wealth and success.
It does, doesn't it?
And it forces you to consider, like, the impact we have on the world.
Mm.
What our choices, financial choices, how they can affect things.
It's like, what if money was used to help communities, to make things more equal?
Yeah, to build a more sustainable future.
Exactly.
You know what I find inspiring about that idea?
What's up?
It's that it gives us power. Like, we can be agents of change no matter our financial situation.
Right, you don't have to be a millionaire to make a difference.
Exactly. It's not about waiting for someone else to fix things.
It's about taking action yourself, using what you have.
Right. Whether that's supporting LGBTQ plus owned businesses or donating to organizations that fight for our rights.
Or maybe even investing in companies that are trying to be ethical and sustainable.
It's about changing our thinking from scarcity to abundance.
Yes. And it goes back to what Mulan was saying about money being energy.
It does.
We can direct that energy, put it towards things that benefit the community.
And it becomes this force for good.
Exactly.
And it's not just about money, right? It's about showing up, being there for each other.
Yeah, volunteering, using your skills, supporting each other.
Building those networks of support, mentorship, collaboration.
Yeah, it makes the whole community stronger.
It creates that ripple effect, it's spreading outward.
You mentioned how this idea can empower people no matter their financial situation.
Right.
And that's so important because it means activism isn't just for the wealthy.
Right. Everyone can contribute.
Well, exactly. Every action matters.
Whether it's, being careful about what you buy, supporting local shops, even just talking about money openly and honestly.
It all adds up. We can all be part of building a fairer and more just world.
And that idea of empowerment,
Mm-hmm.
it really resonates with me, especially for communities that have, been pushed down historically.
Yeah.
It's about breaking free.
Creating that level playing field where everyone can succeed.
Okay, so as we wrap up this deep dive, I want to leave you all with a challenge.
Okay, I like this.
This week, think about your own relationship with money.
Think about how your choices, they can reflect your values and goals.
And remember, we all have the power to make a difference, one financial decision at a time.
We've just scratched the surface here. Keep learning, keep growing, keep pushing for change.
Thanks for joining us on this deep dive, everyone. We'll see you next time.